Well, good afternoon, everybody, and thanks again for joining us for another Calm COVID Convo. We're up to number 8. This is our 8th, Rebecca, of running through the different things that people need to know with all this COVID craziness that's out there. But of course, the whole idea of these webinars is to keep the discussion very calm. So have a calm conversation about what's going on out there and what you need to think about within the business. Now, obviously, JobKeeper payments has been a massive topic of interest for pretty much every business out there at the moment to be aware of. So much so, this is our 3rd webinar on JobKeeper payments. I suggest it probably will be our last. I don't know if there's too many more things that we'll need to do a webinar on, but we'll see. For those of you who don't know me, my name is John Knight. I'm the Managing Director and Founder here at Business Depot. And I'm, of course, joined again by Rebecca Mahalik, Head of Business Depot Sydney, and leads our tech advisory offering nationally. Welcome, Rebecca.
Thanks for having me. Number 8, you said, John?
Yeah, number 8. 3 of them on JobKeeper. Anyone would think people want to get some money from the government, hey?
Well, they couldn't make it any more complicated if they tried.
Oh, come on. I don't think it's that bad. So what we thought we'd do today is there was a lot more information that became available last week. So we've sort of got today sort of split in 2 bits. We've got the update on the extra information or extra things that we got some clarity on last week. And then we're going to talk about the actual processes to apply for JobKeeper payments. There's a few tricks in around that, so we'll talk about that. Most of those registrations only became available, I think it was Sunday night. Some of them went live, didn't they, Rebecca?
That's right.
So we're still sort of testing and we're still sort of finding our feet with some of those things. But we thought we'd run through because this is a big week. They've already extended the time that you need to register from the 26th of April. I understand we've now got through to the 30th of April, Rebecca?
That's correct. Yep.
Yeah, and we've also got to the 30th of April now to catch up on any payments we need to make for the current period as well. So they've given us a little bit more time, a couple more days to get up to speed. But last I heard, I think that the ATO call centre was down or something or other. So I don't know what's going on there, but I dare say there's lots of Australian businesses getting logged on and wanting to get registered for our payments. So let's get straight into it. So updating, we're going to talk about what we found out last week. But Rebecca, I might ask you to kick us off. What's the number one thing we still don't know about JobKeeper payments?
The one thing that we don't know is probably, I think, about the last thing that we don't know at this stage is around the alternative tests. So that's if your business has gone through a downturn in revenue and turnover, but you're not automatically eligible based on the tests that are available now, which is the 30% turnover for most of the people on this call when you compare your current trading to a comparative period last year. So if you have a new business that started in the last 12 months, or you've been through a restructure, or there's some other unusual circumstance for your business that you don't fall into that model straight away, but you are still impacted greatly by COVID-19, that there will be an alternative test. We don't have that information at all yet. We've been given some of the examples of when it might apply, the things that I've just mentioned, like a new business, but we don't know the process. The rules aren't ready yet, and we're hoping they'll come out in the next couple of days, given the fact that the registration date is ending at the 30th of April. So they'll need to let us know soon.
Yeah, the ATO information has given sort of specific examples of when they think the alternative tests will apply. And the example that I suppose really resonates with me is the example of a farm that was in a drought last year, obviously had really low income last year, and it would be unfair to compare that income to this year to determine whether they've had a 30% drop. So they've given that example. They've given the example of a recently commenced business or a business that you've purchased. So that's given us a bit of insight as to where we think they'll be going with those alternate tests. But just to recap, of course, the basic test is the only one that we really know we can rely on at the moment, which is the 30% decline in turnover. Now, if you want to be eligible for the JobKeeper payments for the 2 fortnights in April, now, the fortnights are really important, okay? So the first fortnight commenced on the 30th of March Obviously, there's then another period, I think takes it to the 12th or something or other. And so you've then got a fortnight that finishes on the 26th of April. So to get the JobKeeper payment for those 2 fortnights, you need to qualify for the JobKeeper payments in either the month of March, the month of April, or the quarter from April to June. So even if you haven't had a 30% drop in the month of April, if you're projected to have a 30% drop in the quarter ending 30 June, you will qualify for JobKeeper payments for April. Did I get that right, Rebecca?
You did. Spot on, John. Well done.
But of course, if you don't meet the requirements for reimbursement of the payments for the month of April, and something happens where you then meet the requirements, let's say in May, you can then start from that period going forward. And I had a prime example of that with a client of mine who didn't have a drop of income in March, had really good income in April because of work that had previously been sold in the previous month. But then it fell off a cliff in May and June, which meant it fell off a cliff, but it didn't fall off enough to drop by 30% on a quarterly basis. So in that case, that client is only going to be eligible from May and then May going forward. So they're not getting reimbursement for April. Interestingly, if you only qualify for, say, that month of May, the fortnights that we understand are relevant are the fortnights that end in that period. Now, interestingly, on our blog on that, I've included a quote which I took from the ATO website, which said that, but we think it's now been deleted from the ATO website. So we haven't been able to find it again. And this is sort of what we're playing with a little bit here. Things are being added or taken off the commentary of this without us knowing what's being added or taken away in there as well. So that's how quickly we've got to try and refine our opinion on these things. What was one of the other things we learned last week or key takeaways from what was shared last week, Rebecca?
Before I move on to that, we've already had a question pop up, which is great. And I forgot to actually mention earlier that if you do have some questions, pop them in the Q&A box. Feel free to reach out. We will try to answer as many as possible. I'm going to answer this one now because it's relevant to what we just spoke about. So if a business sole trader started up in January and had to close due to COVID-19, do they qualify for JobKeeper, or did the business have to be open for 12 months to qualify? Now, that is a prime example of one of the businesses that will fall underneath the alternative tests, which is the thing that we don't know. My gut would be telling me that you will be eligible. The process to go through for that application and what you're going to need to prove is what we don't know at this stage. So although John said we might not do another webinar, we might have to do one just around alternative tests when we find out about it.
Yeah, it'd be interesting to maybe even get a little bit of clarification on that question, because if they say they've closed, do they mean they've closed the doors completely and no longer exist as a business? Or have they just closed the doors but ready to reopen it at some point in time? I'm using the doors sort of metaphorically, because if they're no longer trading, then they won't be eligible, will they, Rebecca?
Yeah, that's right. So to actually get JobKeeper, you need to effectively be trading. So you can have no income because you say you're a restaurant that's had to shut down, but you should still have employees engaged in the business, because the JobKeeper needs to go towards keeping them paid as well. You did note here that you're a business or a sole trader. So depending on what you were doing, I suppose the whole process around it is whether or not you plan on reopening when you can as well, or if you completely shut down with no intention to reopen.
Yeah, absolutely. Susie's got a question on there as well, Rebecca, which I'll answer for her. And that was, if you only qualify in May, what date do we need to start having paid the minimum $1,500 per fortnight? And yes, you're right, Susie, that fortnight commences on the 27th of April. That's the first fortnight that you need to have paid the minimum to qualify in that May. And Susie, your industry, that is going to be a fairly common situation if you can't meet the quarterly drop in turnover. I was talking to someone else in your industry yesterday, and they actually were able to meet it on a quarterly projected basis, which meant you can get it for April as well. So just keep an eye out for that in the whole scheme of things too. Okay, what was one of the other learnings from last week, Rebecca?
It was just some more clarification around your comparison periods. So making sure that you're comparing apples with apples. So when you're looking at the results that you're comparing, it's really important that you use the same methodology. And when we're talking about that, we're mostly focusing on these terms that are cash and accruals basis. So if you operate and report your GST on a cash basis, you can elect to use the cash basis to compare periods. But if you do that, if you're looking at your cash revenue or your GST revenue for the month of March or the month of April or the quarter ending June, you need to make sure that when you compare it to last year, you're also comparing to last year using the cash basis. The cash lodgements are only going to be an option for businesses that have cash as a reporting option on their basis. Everybody else will have to use the accruals basis. But again, it's the same thing. When you're comparing period to period, make sure you're using the same methodology and you have to use the same months. So March compares to March, April to April, the quarter ending June to the quarter ending June. As long as you do that, same methodology, same periods, and you should have that comparison down pat.
Yeah, I don't know about you, Rebecca, but when we've started to do some of those comparisons, that timing of Easter last year really pushes us towards that quarterly comparison to take out some of those abnormalities within there.
Absolutely. And that cash versus accruals becomes really important as well, because accruals, which is all around when you raised your invoices as opposed to when you received the cash for it, is generally more reflective of what's actually happening in your business, because cash can be really up and down depending on what your payment terms are or when people paid you. We're noticing much more consistency, even with cash businesses, when we look at the accruals basis instead, and can really see that impact of the downturn using accruals as opposed to using the cash method.
Yeah, cash can be pretty random really from a timing perspective, can't it? So there's no real insight in comparing cash receipts in one month compared to the same cash receipts in the last month. So it was great that they came out with that concession. Well, I think of it as a bit of a concession that you can, if you are registered for GST on a cash basis, you can choose to apply it on either a cash or an accruals basis. But otherwise, it's pretty much on an accruals basis.
Yeah.
Okay, we also got a little bit of clarity around some of the things to include or not include in turnover. So I'll summarize this and try and there's some very simple points in here, but we're getting asked a question. So I just want to make sure that people have their head around this. So what is included is it's all your taxable supplies. So that is anything that you charge GST on. And if you're in, for example, the medical industry, if you have any GST-free supplies, so medical services is probably the best example of a GST-free supply. What you don't include is anything that is considered, now I know I'm using tax terminology here, but it's an input tax supply. Now the main input tax supply that you wouldn't be including are things like financial supplies. So if you've got interest income in your P&L, that is not included for decline in turnover test. If you're selling shares, if you've got residential rental in your entity, they are all input tax supplies that you do not include. You don't include the amount of GST that you're charging to people. If you're selling something that just happens to be in your entity and it's not actually connected to your business, like if you sold a car, that's not included. Gifts and donation income is excluded unless you are a gift deductible recipient registered with the ACNC. Sales not connected with Australia, don't take that too broadly, but really that's about if you've got an overseas operation, you don't have to sort of bring in anything from that overseas entity. The amount you actually receive from JobKeeper is not included. And if you've got supplies that are made as a result of transferring, say, capital assets, so if you're selling an asset from one entity to another. Rebecca, what else did we learn?
We had a question straight on what you just brought up, which is, are dividends input tax supply?
Yes, they are input tax supply. So you do not include dividend income in your assessment of turnover.
Okay, great.
Any more questions on there we want to tick off on?
Just having a quick look.
Peter's got a question there. He's saying his revenue may reduce by 30% in May. Do you want to talk about how that would then work from a timing perspective, just to reinforce, Rebecca?
So if it's not going to reduce until May, and what you need to understand is whether or not then for the quarter, so April, May, June, whether or not that whole entire period will reduce by 30%. If the reduction in May and June is going to be great enough that the whole period will drop down by 30%, you can start applying now. If it's not, and you're genuinely not going to see that 30% downturn till May, that's going to be the first point in which you can start to claim JobKeeper.
And one of the things they also gave us a bit of clarity on, well, it's in the notes on the website, isn't it? It says, Rebecca, that once you're in, you're in. Which is like, once you qualify, you don't have to apply the test over and over again. But one of the things I'm a little bit, I suppose, unsure of is we have to actually report our turnover every month, but we can't see what they're using that for other than sort of data collation, because they clearly say on the website, once you're into the JobKeeper payment system, you're in the system until the 30th of September.
That's right. And they say that in lots of places. So understanding is you get in, you qualify, and you receive your payments, and you'll continue to receive the payments. And that it is, the data collection is purely that. It's for statistical purposes. And I would assume that they're going to be what they use to sort of measure the economy's bounce back in different industries, whether or not the payments are working. And who really knows? But right now they've said they're not going to be using it to stop payments, to turn off eligibility, I suppose.
Warren's got a question on there about referring to the fortnightly payments. Now, this fortnightly, they actually call it a JobKeeper fortnight. It's something that's ingrained in the legislation. And his question is, but does it matter if you pay your staff monthly in arrears? I think that the comment on the ATO website was that as long as it's on a attribution sort of basis, they're being paid for that period and within that period. So I've applied my mind, Warren, to the idea of most people who pay monthly pay 2 weeks in arrears and 2 weeks in advance. As long as they are paid during those 2 fortnights through that monthly payment, my understanding is that you'll be fine.
Yeah, and you need to make sure that they're paid the minimum amounts over that period. So if you're paying monthly and your monthly is actually more than 2 fortnights, and they need to be paid more than $3,000 that month, effectively. Because
if we think about April for you, Warren, I don't know when you pay that, whether you pay that on the 30th of April. You would only be fine paying it on the 30th of April this month for April because of the concession that they've given us. Normally the fortnights would have finished on the 26th of April, and you would have had to have had it paid by then, I dare say, Rebecca.
That's right.
Yeah.
Yeah, it all needs to be paid in advance.
Rebecca, did we get some more clarity around divisions versus other entities and those types of things?
In regards to grouping?
Yeah, because there's sort of 2 things, isn't there? It's like, do you need to group multiple entities, or can you look at just one division within a business?
You can actually, the turnover comparison that you make when you're determining whether or not there's been a drop in income is for that particular entity. You don't need to look at it on a group basis. So if you've got, say, a holding company that has 4 companies, 4 or 5 different trading entities underneath it, each entity is treated separately for the purposes of this, or even if there are commonly owned entities that are normally grouped for, say, payroll tax reasons or other reasons, for JobKeeper, each entity is treated differently for eligibility. There's no grouping in regards to that.
Yeah.
Which is great. There might be some parts of the businesses that aren't suffering as much as other parts, and this way you can still claim for the appropriate bits of your business.
Yeah, it's interesting. I've had it sort of the reverse, Rebecca, where I've got clients with, say, 2 different businesses. One's down by 50% and one stayed the same. The test is on a combined basis. You can't just split those divisions out within the same entity to
Correct.
Apply the test.
Yeah, so they need to be separate entities to have the test applied separately. But if those divisions or businesses run within the one entity with the same ABN, then it does all get consolidated.
Yeah, absolutely. We also had a bit more clarity around the self-employed payment. So if you're claiming a JobKeeper as a self-employed person, so a sole trader, a director in a company, a partner in a partnership, or a beneficiary or trustee of a trust, then if you don't draw a wage from any organisation, you may be eligible, if you're actively engaged in those businesses, to get the $1,500 for yourself. Now, one of the things we got clarity on last week is that that is income of the entity, and it doesn't have to be paid out, or our interpretation of that is it doesn't have to be paid out to you as an individual to be eligible. So there's sort of a slightly different sort of set of rules in there, in that for normally for an employee, the JobKeeper payment has to have been paid. You're not going to have that in the situation for one of these self-employed entities.
Right. And just to make it clear as well, that you can only claim for one business participant. So if you've got two directors, you can only claim for one of them under JobKeeper if they're both not taking wages.
Yep, exactly. And obviously they can only do it from one entity as well. We've got any more questions on there, Rebecca?
Quite a few, actually. Good one here. So say a business owner has 10 employees and they can't afford to back pay 4 stood down casual employees for the month of April. But after the business starts getting JobKeeper payments in May and loan funds, the business can start paying these 4 employees moving forward. Can these employees start receiving JobKeeper payments in May, or are they out entirely? Now, that is a very loaded question. There's a few things in there. So the first thing is, if you want to claim JobKeeper payments, you absolutely need to pay your staff in advance. And if you want to get it from the beginning, all the payments for the April period need to be made by the 30th of April. That's been made really clear.
And if they haven't paid them, you won't get the JobKeeper payment made to you in the first weeks of May. It's very clear that it has to be paid to them. And now you've got this concession to sort of catch up on that amount before the 30th of April. But on a going forward basis, that fortnightly timing becomes really important as well.
Yeah. Well, what's also been touched on a little bit in here is the difference between different employees. So you've mentioned casual employees, and I'm going to guess that means you also have some other employees that weren't casual in the business. Now, the JobKeeper program sort of is an all-in or none-in process. So all of your employees have, if all of your eligible employees you need to claim for and you need to pay for in advance. You can't pick and choose amongst the employees. It's all of them or none of them when you're doing this claim.
Natalie's got a good question on the chat. Hi, Natalie. What if the business operates in one entity and the employees are engaged by another entity? Now, it's a fairly common sort of structure to have like a service entity that might employ some people and you on charge it over to different entities. Natalie, I've looked at that one for myself, and I can't see anywhere within the legislation that it would enable us to look through those service charges or management fees that are on charged. And the legislation is pretty clear that they need to be employed by the entity that is claiming JobKeeper payments. Got anything to add to that one, Rebecca?
No, I think that's covered it quite quickly.
Madeline has asked if directors are taking wages, however, they will all be paid. So if a director is on the payroll and PAYG withholding is being deducted from it, then they would be eligible, provided they meet the other tests, for the JobKeeper payment, and you don't need to rely on the business participation side of things.
We've got a question here. Can we increase the income from 2019 to include inflation so it is a more correct comparison? No, unfortunately, you cannot do that. You have to just use the figures that were actually lodged. And there is provisions in there for checking lodged numbers as well. At some point, the ATO will do a level of comparison, and they'll do things like compare your March BAS to, your June BAS to your June BAS and things like that. So just use the figures that you've lodged either via BASs or tax returns.
Yeah, and there's a few questions on here with a bit of a theme, and it's been questions we've had from the clients as well around this comparison to last year is not going to be relevant, and it might be just because they've grown over that period of time. So we've got a number of clients that have been on a big growth sort of curve anyway, and because of that, even though they have a drop off, they may not meet the 30% test. So Natalie, hi Natalie. Natalie Hastings has got a question here. Hi John. I don't think we will qualify as we have had significant growth in the past 12 months. I'm hoping they consider comparing the last quarter as an alternative. I'm fingers crossed on that one, Natalie, but I'm actually not confident we will get something as simple as that. I think we will get it when there's been a restructure. I think we'll get it when there's something like a drought in the previous year, making the previous year's comparisons not meaningful. But I don't think they're going to come up with an alternate test that is just because you've grown, that it's dropped compared to the last quarter rather than being compared to the same quarter last year. I wish it did, but when we think about, I suppose, the objective and the philosophy of the legislation and the package as well, it's really trying to target those people that are struggling to pay their staff so that they can keep them employed.
That's right. I've got a question here from Margie around comparisons again, and if your business is registered for quarterly BAS, do we have to compare the June quarter, so April to June to April to June, or can we just compare April to April? You can absolutely compare the month of April 2020 to the month of April 2019. And if there is a more than a 30% drop, then you're eligible, and you don't, and you can claim and stay as part of the program ongoing.
Janelle's got a question. We had 2 separate companies last year that are consolidated operationally. This year, so we need to have the test applied to a singular entity. As the numbers will not reflect the drop accurately otherwise, how do we obtain contact with the ATO Commissioner to have the assessment done correctly? Unfortunately, we don't know how to ask for discretion at the moment, other than the general hotline sort of phone calls. You haven't seen anything come out today or anything, Rebecca, on that?
It's still just saying to be advised at this stage.
I'm getting a lot of people say, can we just ask? Can you just give them a call and just ask and see whether they'll give us a concession? We expect that there will be a formal process to apply for discretion. I honestly can't see them having a lot of discretion except in specifically defined circumstances, like maybe the alternative tests and those types of situations. I'm interested in your question though, Janelle, from a basis of consolidated operation. I'm not quite sure if you mean tax consolidated or not. But even if you're tax consolidated, I would expect the test would need to be met at the individual entity level. But I haven't actually applied my mind to the idea of a tax consolidated entity, whether that has an impact on this. I doubt it, because the turnover uses projected GST turnover definition to determine what we think the income's going to be.
Yeah, we've got a question here from Con. Can you pay JobKeeper for a period, then stop due to cash flow, then restart that person on JobKeeper when you reopen? If you're claiming JobKeeper during that period, you need to receive those funds and pay that person the $1,500 a fortnight. You can't put them, you can't not pay them. And if they're stood down, they're still employed by you as well. So that means they need to be paid the JobKeeper, and you need to apply on their behalf and pay them in advance to the end of April. And the only way around not paying them effectively is to either not claim JobKeeper or to let them go completely.
Andrew Pike has asked, has there been any change to the end date as to when a business will stop receiving the payments if they qualify? No, the website, the ATO website still says that once you qualify all the way through to the 30th of September. I don't know if you missed my comment before, Andrew, but I did flag that I'm not quite sure why, therefore, we have to give our monthly turnover and what would happen if we no longer are dropped by 30%. But what they're saying is that you will then be qualified through to the 30th of September. And I can only think that the theory behind that would be that you've suffered a 30% drop, which is a significant drop. So you therefore need to have it for the recovery as well.
We've got a question here from Sandy that was, due to the nature of the industry, the impact might not hit them till July to September quarter, and they've kept all staff on to reassess later. Can they apply later in the year? At this point in time, the months past June aren't part of the test criteria. Whether or not that extends out as the situation evolves, it might. At this stage, we don't have any clarity on that at all. It's the test periods from March to the end of June.
Scott's got a question here which sort of ties into some of the other stuff we talked about. If we pay our BAS quarterly but will not fall by 30% for the quarter due to a great April, how do we report the big drop off? Now, I can answer this because I did this the wrong way last night on the tax office portal. So If you meet the test for the quarter, when you go on the tax portal to register, it asks the question, when did you first have a decline in turnover? What month did you have a first decline in turnover? Now, in your situation, Scott, you would answer there, May is the first month that you had a decline because you're only eligible from May onwards. But if you're actually eligible for the whole quarter, you will need to answer April within that question. And so you'll see that it actually cuts a heap of questions out. Once you answer May on the portal, it cuts a heap of the extra questions out. So I learned that one by mistake last night, given I was trying to do the opposite.
Okay, we've got a question from Maria around the period of time that she will be reimbursed for. So they've put in that they experienced their decline in turnover from April and asking if they'll be reimbursed for March. The reimbursement period starts from the 30th of March, which is really effectively April. So you only are going to get reimbursed the April period, and the first round of payments will be made in May. Okay.
Yeah, so we'll have 2 fortnights being repaid in the first fortnight of May.
Yes.
Okay. Leanne's got a question. So you don't need to repay the money if your income increases. Yeah, no, it doesn't sort of seem logical, Leanne. We haven't seen anything to say how they will require money to be repaid. What they have said is that if you weren't entitled to it, they will ask you to repay it. That could include if it was in a contrived sort of situation that you did something to manufacture a 30% drop. But based on the information we have at the moment, we can't see how they will require it to be repaid. Rebecca, should we jump into some of the processes? And we've got a lot of questions on here, so we hope to come back to them all, but let's just make sure we cover off on these processes as well, because it's pretty important for people to know how they go about these things.
Absolutely.
You happy to start us off on that? What's the first thing they need to do?
So the first thing that you should be doing so that you're staying across all of the changes to JobKeeper and any additional information is actually registering your interest and subscribing to the JobKeeper section on the ATO website. We've posted that on our blog, and I'm actually think if I get a sec, I'll grab the link and share it in the chat box as well for everybody. That's your first place to start to make sure that you're registered. From then, it's going through checking whether or not you're an eligible employer using some of the information that we've shared today, and then confirming your eligible employees. And a really important step here is getting them to actually fill in a declaration that says that they're eligible and that they're allowing you to claim on their behalf. This is really important to ensure that you have their authority and that they don't claim JobKeeper somewhere else, because the employee can only receive it from one employer. And if you've got part-times or casuals, or even some full-time staff may have multiple jobs.
There's a separate form if you're a business participant that is applying for it as well. So those nomination forms are really, really important. Through that eligibility of employee test, it's also really critical that you make sure you've actually paid them the $1,500. So if you've got someone that's short, you need to top them up by the 30th of April for this period.
That's right. And you need to make sure that you continue paying them if you want to keep receiving the payments as we progress through the next 6 months.
And what do you do with those forms, Rebecca?
You have to keep those forms on file for the next 5 years in case there's a review.
You don't have to send them to the tax office or anything. You just got to hold them as the employer.
And they have said they have given us that 5-year period, which is around about standard for most documents with the ATO and with Fair Work. So from the initial enrolments for this actually opened yesterday, as John mentioned before, they're open till the 30th of April if you want to be able to claim the first round of payments. You can do that either through your tax agent, so through Business Depot or a BAS agent, or you can do it yourself on the business portal using your MyGov ID. If you haven't got your MyGov ID, I think that we've shared before some instructions on how to set that up. It's also on the ATO website, but we are also able to help you and get engaged to help you through this process as well.
I just want to emphasize that enrollment is different to registering your interest. So the registering your interest, think of that as just put you on the mailing list. This is the actual start of the JobKeeper application process, is to enroll and to say that you've assessed that you've had a decline in income or you've met a test that makes you entitled to the JobKeeper payments.
Correct. So once you go through that process and you've done your initial enrollment, the next steps that are going to be involved is identifying your eligible employees. Now that process can be very different depending on how you are currently handling your payroll at the moment. So depending on what software you use and whether or not you're using single touch payroll. The main options are going to be whether or not you process this through the portal or directly inside your software. If you're using single touch payroll, whether you use your software such as Xero Payroll or you use the portal, either system should automatically give you a list of the employees that you've been paying in single touch payroll, and you can go through and tick off the ones you'd like to claim. If you're not using single touch payroll, you're going to have to manually enter their details. So that'll be, I believe it's a name, date of birth, and tax file number needs to be entered in to be able to claim the employees and the period of time that you're claiming them for.
Because correct me if I'm wrong, Rebecca, there's sort of the single touch payroll sort of side of things where you sort of identify a person as getting a JobKeeper payment. But when you do your enrollment, you've actually got to list the number of people that you believe are eligible. You've got to put a number in there.
That's right. But that number, that's number that you think that you're originally eligible for. As you progress through, that number will probably not be able to increase, but it may decrease if for whatever reason staff have left or they're no longer employed by you. Actually, it's probably a good time to note as well that if you swap out a staff member, you can't claim for that new staff member. It has to be someone who was working for you on the 1st of March and was engaged in an employment arrangement with you on the 1st of March. So no new employees will be eligible.
It's very clearly individual based, not role based.
That's right. Okay.
And we've got a bit of ongoing reporting we've got to do, Rebecca.
That's right. So every month we're going to have to go in and advise again whether double check off all the employees, make sure that they're still all eligible, that they're still working for you. And also we have to declare our back revenue for the month and a projection moving forward of what you think your revenue is going to be. As we've mentioned a couple of times, we don't, all of our understanding and all the information from the ATO is this revenue reporting will not make you ineligible. And it's supposed to just be an information gathering process by the ATO, and we've not been given any information to lead us to suspect otherwise. They're the main generic steps that we've got to go through.
Yeah, so obviously it's really important to sort of follow those steps. I mean, at Business Depot, we do a lot with Xero, and I know Xero is building rapidly a lot of this functionality within payroll to tag people as eligible for JobKeeper payments and anything like that. Is there any tips from a Xero perspective you'd have for the audience, Rebecca?
Yeah, Xero's done actually a really job of very quickly rolling out their process for JobKeeper payments, given the fact that, like us, they're getting information updated every day by the ATO. So what they've already done is inside Xero Payroll, if you go Xero and then Payroll, Pay Employees, at the top of the page is a little link and it's got, do you need assistance with COVID-19? If you click on there, all their resources are in there and the tools to use to claim for your employees for JobKeeper and identify the employees that you're going to want to claim. It's all in that link. Given the fact that they've put this up quite quickly, they haven't probably made getting to it the easiest in the world, but I imagine that will start to become a lot clearer as we progress through this. So what they've done is there's another step that they've also automatically rolled out to all Xero files that have payroll enabled. And you'll notice that your employees all have now a new allowance category, which is, I think it was called JobKeeper Top Up. JobKeeper Payment Top Up is what they've called it. Now, this is important because if you've got employees that currently receive less than $1,500 a fortnight, to claim JobKeeper and to continue paying it moving forward, you must pay them $1,500. You do not have to pay them superannuation on top-up differences. So by that, as an example, if you pay someone $650 a week normally, and now you have to pay them $750 for that week, you don't have to pay super on the $100. By using this JobKeeper allowance field, you're identifying that these payments are top-ups, and it also will not calculate the superannuation on that process. So next time you go to process payroll, when you go to do that, underneath the normal ordinary hours earnings line, you can add an extra line and grab the JobKeeper payments. It'll be there for you already automatically, thanks to Xero, and just write in manually the amount.
And just to be crystal clear on that, that line item is only for top-up amounts.
Correct.
So only if they're already getting paid $1,000 and you're topping them up $500, that $500 goes in as that top-up. It's like an allowance within the system. I think that's the same way you'll do it if you've got someone stood down.
Correct.
Rebecca, the whole $1,500 would go in there as a JobKeeper top-up amount.
Yeah, so if you're a business that's actually closed, but you're going to be claiming JobKeeper because you closed for this period of time, and you've got employees that are stood down, or they're stood down because there's not enough work even though you're partially open, that's how you'll process their payroll. For the last few fortnights that have already gone through, you may need to go back and do some unscheduled pay runs to top people up going backwards for the first 2 fortnights in April. And that'll be the same process. That whole top-up pay will just be the JobKeeper payment.
So just to re-emphasize, the big steps: registering on the portal, whether you do that yourself or through the tax agent. That's where you say you're going to drop by 30% and which period you're going to pay it for. And then it's the nomination of the employees that you're applying JobKeeper payment for. And that's through the single touch payroll, isn't it, Rebecca?
That's correct.
Predominantly.
Mm-hmm.
Okay. We have a stack of questions to answer on here, Rebecca.
So many questions. There is a high chance we're not going to get through all of these. So afterwards, please reach out to us for anything that we miss. But I suppose
we'll do our best.
Yeah. Okay. Anything?
So Gail's got a question on here. Hi, Gailey. If structure has changed and income has started to shift to a different entity in the group, so that on the face of it, per BAS, as the employing entity would satisfy a decline in income test, do we still need to wait for the discretion or the alternative tests? Well, that's an interesting one to sort of think about, isn't it? Because we know we've got alternative tests to try and make us eligible, but I'm not quite sure whether there's anything sort of built in there that makes you have to take into account a restructure. What do you think, Rebecca?
I
I'd
think
probably revert to what's right in my head.
Yeah, I think that's going to be... That's an interesting scenario, and I think that they would be eligible immediately.
Possibly.
Yeah, and an alternative test is not something that's going to need to be applied.
Yeah. Well, if we apply just the basic tests, the basic tests are black and white. If your turnover's dropped by 30%, might need to talk to you about that one offline a little bit, Gail, and assess, I suppose, whether you want to go down that path.
Yeah, we've got one here just from Maria. It's not actually a question, but it is a comment which is important. And that's to be clear that the $1,500 payments are gross payments. So you will have to withhold tax, which is around about, I think it's like $90, $100 a week, $200 a fortnight gets withheld from the employees. So it is it's the gross payment, not the net payment.
Yep. Kevy's got a question on there. We only became eligible in July based on the projections. Is it possible to enroll only in July and get JobKeeper payments from July to September? We understand, yes, if you become eligible in July, you'll be eligible then for July, August and September. So that, again, it's a quarterly or a monthly test. So if July is the first month or September quarter is the first quarter that you meet that test, then you'll be eligible from that point. And that's where, when you register online, they ask a question: in what month do you project that you will drop your income? I probably wouldn't do that just yet, Kevin, just in case something happens in May or June, because I'm fearing that it might be tricky to change that month that you put in that schedule.
That's right. Does the top-up amount need to be an allowance, or can it be a separate category excluding super? Inside of Xero, they're treating it as an allowance because it was the way that they've dealt with it from a reporting side. There's actually nothing in the legislation that states it needs to be treated as an allowance, is my understanding. Do you agree with that, John?
Sorry, I missed that. You were doing a bit of a robot dance for me, Rebecca.
The top-up amount, does it need to be an allowance? I don't believe that's in the legislation. That's just the way Xero is treating it. I believe MYOB might be treating it the same way.
Yeah, I believe it's just how that they're processing it as a line item so that they can specifically identify it for payment summaries and so forth.
Okay.
Okay, do you have to keep staff after the 30th of September when stimulus finishes if business has not recovered enough to keep them on? I don't believe so. It's only about keeping them on during this period of time. So that's my understanding of that one. Warren's got one, just confirming, how is the number of staff determined via STP reporting? Well, you've got to assess which employees are eligible, which means they need to have their nomination form done. They need to say on that nomination form that they're going to claim it through you. And then in single touch payroll is where you flag the individual employees that are eligible for JobKeeper payment. So that if that changes from 1 month to the next, it automatically goes through that single touch payroll. Did I get that right, Rebecca?
You did indeed. What else we got here?
Daniel says, if I change my staff's pay rate to match the JobKeeper payments, do we still have to pay superannuation? Yes. Because you're still paying them for doing something. It's not a top-up amount, it's only the top-up amount. If you stood them down and didn't require them to do any work, you wouldn't have superannuation on that.
Yeah. If you've altered their pay rate so that they're getting paid $1,500, maybe you need to reassess the way that you're going about that and instead pay them as you normally would and pay a separate top-up amount instead of playing with their hourly rate. But if you want to just clarify that with anyone on the team, feel free to reach out afterwards.
Marie Dean's got a question. We forgot to indicate a business participant would be eligible on the JobKeeper enrolment form. Is there an option to relodge the JobKeeper enrolment form? We haven't seen any ability to amend applications or anything like that, but I wonder, Rebecca, whether that would be driven through your single touch payroll anyway. Oh no, because they wouldn't be an employee.
That's right. It might actually, unfortunately, need to be a phone call to the ATO and a long wait to clarify that.
Unfortunately, yeah.
Yeah. Can you please re-clarify redirectors? Did you say you can retain the $1,500 if they don't normally receive a wage? That is what he said.
That is it. That is our understanding, is that the $1,500 is then paid into the entity and is retained in the entity and taxed in the entity. This is one of those ones that I've seen information on it and then I've seen it sort of edited. So I'd be wary in saying that one, but that's our understanding of it.
Yeah.
Ben Hassel, we have a casual who is on a pension and only works now and again, $250 per week. They don't want to be paid anymore to risk their pension. If we do not pay this employee the increase, are we excluding the other employees? I don't believe it excludes the other employees, does it, Rebecca?
Well, it falls under the all in, all out rules, because if those employees were technically eligible employees, except they don't want to be, then possibly.
So you think that could be an issue?
I do think it could be an issue.
We might take that one offline and see if we can answer that one for you, Ben.
Is the monthly reporting entered through the business portal? Yes, if you're doing it yourself, it goes through the business portal.
Although the forms have not been released yet as to how you can't do it yet. You can't see what the forms require. Claire's got a question. When in the month will the reporting have to happen? It's within 7 days of the end of the month that you have to do the reporting of your income. Otherwise, the payroll reporting, if it's on single touch payroll, is obviously live when you do payroll. Do you know what the timing is if you're doing it manually, Rebecca?
No, I think it's the same.
Yeah, I would have thought so too. I'm a sole director. My wife is one of our employees. Can I claim for both of us? Yes, we've had that question a couple of times over the last couple of weeks. I can't see why not, to be honest. There's nothing in the legislation that says only a husband and wife can get one, whether they're employees or directors, because employees are eligible, and then one business participant can be eligible.
Do we have to pay holiday pay and sick leave on JobKeeper? So that's a bit of a strange question. So I think that is whether or not you're accruing holiday leave and sick leave if someone's on JobKeeper. So if they're only receiving JobKeeper as opposed to getting normal pay.
Yeah.
Yeah.
Yeah, Vicky, I think that's probably where you're coming at it from. Yeah, if you've got someone, even if they're stood down, they are still accruing. We understand through the employment law and the webinars we've done on the employment matters previously, we understand that they will still need to accrue sick leave and holiday pay during that period of time, even if they're not working.
Correct.
I use MyOb in our business and have already processed several pay runs for April. I don't know. I think you might have to do some manual reporting there, Anna, as to tick the box that that you're claiming JobKeeper for them.
I actually think MYOB has a process of having to undo and redo some of their pay runs, where we had a little bit of a look at this morning, but I'm not 100% across that we do have someone who is quite across MYOB in the business that we can reach out to afterwards.
Yeah, we've got another question, Chris here, who just started after being dormant for 3 years. And now the market has essentially disappeared. Well, you're going to have to rely on the alternative test if anything comes out, which they have indicated that new businesses there may be an alternate test for that. Okay, we've got stacks of questions still. Rebecca, you got another one there?
I've got a question here for the link for the employee form, which I am popping into the chat now. If anyone wants the form, that's the link to the ATO to grab that. Great.
Linda Scanlon, if a casual does not want to participate due to participating through another employer, or it will affect their, we've answered that one already, haven't we? We've got a Saturday girl works once a fortnight and has another job 3 days a week. If her first employer doesn't opt in, do I have to offer JobKeeper to her? I don't know. I haven't thought about it that way. I mean, they've got to choose one employer that gets the JobKeeper. And you're going to need some cooperation with her, I suppose, as to who that is. But if she's only the Saturday girl, you probably would have been required to pay or to top up her pay to get her to the $1,500 rate. I don't know if you have to. If the first employer doesn't opt in, do I have to offer it to her? I don't know. Rebecca, do you have a view?
No, I'm actually not sure about that one. We might have to do some more research and come back to you. I haven't seen any examples that lead to that. I think that there's an assumption that if someone can opt in, they are opting in.
Yeah, we did have a couple of questions that came through before the webinar.
Yeah.
Tony Moa's got some questions on here about how do you recommend paying JobKeeper to sales personnel? So this is a real estate specific question around com only and debit credits. We're actually going to do a real estate specific webinar on Thursday at 12:30, where we're going to dive into all the COVID stuff, employment law, JobKeeper, cash boost, everything. And we're going to talk about it specifically for real estate. So if you're in the real estate industry, come along to that. Jeff had a question around him and his wife work in a business together in a company structure. One of them has had a 90% drop in income and the other one has had no drop. So that goes right back to one of the questions Rebecca answered for us before, in that it matters as a whole, and it doesn't matter that one division has dropped by 90% to determine whether we're eligible or not.
I've got a question here about lodgements. If an entity doesn't do the BAS lodgement for the last 3 quarters, and if they do it now, will they get the JobKeeper payments? Now, the JobKeeper payments aren't specifically tied to BAS lodgements, and you needed to be eligible, you needed to have lodged either the 2019 tax return or an activity statement from the 1st of July 2018. So as long as you have done one of those things, you should still be eligible.
Yeah, and that answers one of the questions from Chris on here as well, who hasn't actually done a tax return for 3 years. I know someone who could probably help out with that, but hasn't done a tax return. So if you haven't done a tax return and you haven't lodged a BAS since the 1st of July 2018, you won't be eligible. You won't be an eligible employer. for that entity?
Is a 5% partner who's actively engaged in the business entitled if they haven't been taking a wage? So the active person was all around actually being able to prove that they're doing things in the business and are actively engaged in the running of the business. So if that can be proved, that shouldn't necessarily be an issue on the active. It's not around how much of an ownership stake they have in the business.
Okay, we might just do a couple more.
Yeah. Do we know if JobKeeper payments are included in long service leave calculations? I have a casual employee who's earning more than normal now and her long service leave is due in October. Will I calculate her long service leave entitlement including JobKeeper payments? That I am not sure about and is going to have to be something we might need to do a little bit more research on. I'm going to actually think no, because the JobKeeper payment, particularly the top-ups, are identified separately or should be identified separately in the pay run. So it's going to be based on their normal earnings, particularly because JobKeeper payments are, the top-up amounts are exempt from super and things like that. I'm going to say they're going to be exempt from the long service leave calculations as well, is my gut feeling on that. That's not something I've read in legislation yet though.
Yeah, I've got nothing to
ever thought about yet.
Yeah, I haven't had. We've gotten some good ones today. Someone on here is a sole trader, but they broke their leg and did not work for the end of March and April. I would assume if they were on sick leave, but I suppose it's a sole trader. I'd have to apply my mind to that one as well. I mean, whether they're still actively engaged in the business, if they've broken their leg and can't work. There's a terminology for the self-employed that they have to be actively engaged. So we'd probably have to look into that one, sorry.
Yeah.
Carol, if you have numerous jobs, you can only claim JobKeeper from the employer, you claim the general tax exemption. I don't think that's specifically the case, but you would want to align it so that you're claiming the tax-free threshold.
If you have multiple jobs and some of them are casual and then you've got a full-time and a permanent part-time, I believe you're supposed to try to claim it from the job that is the more permanent job as opposed to applying it from the casual is one of the examples that was shown, but that's all. They didn't say anything any further on it.
There's a couple of questions on here about not-for-profits. Now, not-for-profits were given a separate threshold of showing a 15% decline, but I'd encourage you to definitely look at the definition of what entities that's applying to, because from memory, I think it was specifically limited to those that are registered with the ACNC. Now, not all not-for-profits, and I know one question on here is like a school P&C or a tuck shop sort of style incorporated association. I don't believe it's been extended to those types of organisations. It's only those that are registered registered with ACNC is my understanding, but I would I'd check the definition on the tax office website of what entities get the 15% test. Luke's got a question. We have a team member that has come back from maternity leave that the person has been back for 5 months. So as long as they're permanent or part-time as at the 1st of March, I believe they're still eligible, aren't they, Rebecca?
Yeah, I agree.
Yeah. There's a lot of questions again around real estate agents and commission only versus debit credits. Again, I might just push those ones for our Thursday discussion if you don't mind. What do you reckon? Do you think we've done all right, Rebecca?
Yeah, look, I think we've answered most of them. I do just want to answer one more. I don't know if we've answered Carol's yet. I'm about to do a pay run today for all chosen casual employees for JobKeeper, so they're recognised in STP. Should I be paying them the full $750? Yes, if you plan on claiming, you need to pay them the full amount. And depending on whether you're using Xero, MYOB, or what you're using, have a look at the changes they've made to their software for the top-up payments.
Yeah. Guys, I know there is 67 unread questions or unanswered questions on there still. I know there's some in the chat that we haven't got to yet either. So apologise, but we are out of time. thank you again for joining us on this Calm COVID Convo. As I said, if any of you are in the real estate industry, we're going to be doing a real estate specific webinar on Thursday. I'm going to ask Craig Harrison from our real estate team to be joining us on that. Rebecca's going to have a break on Thursday. I'm not going to ask her to come along. But we're going to dive into everything COVID related for real estate agencies, real estate businesses. So we're also going to have on there a lady by the name of Justine Ansell, who's a specialist employment lawyer. And she's going to be on there to answer any questions we have also around the fair work and those types of things, and really dive into this com-only debit credit sort of style considerations, because I know Reef released their view on some of that yesterday. I'm interested in that. So we'll talk to Justine about that on Thursday, because it's really an employment law matter, that one. Guys, thank you again for coming along. Please share that we're doing these webinars with any of your friends, family and contacts, anyone that you think can get some value out of being on these webinars with us. We're doing this because we want to help the community to get their head around this, because it's really important that as many of these businesses survive and as many of these jobs survive as we possibly can. So please share. We'd greatly appreciate that. We're loving the feedback that we're getting. So thank you for giving the feedback again. We will look through the unanswered questions. A guy by the name of Bradley Dean from our team will be in touch if there's anything in there that he thinks we haven't answered on the video webinar. So this will be recorded. You should get an email of it with a link to it. It'll also be on our blog this afternoon as well, if you want to watch over it again for some more riveting discussion around JobKeeper payments. Rebecca, thank you once again.
Thanks, John.
And of course, if you do have any questions, reach out direct. Check out our main blog on COVID, which the shortened URL is bit.ly/BD COVID updates. That will feed you to all the other blogs we have on the state concessions, the bank concessions, the business tips that we have. We'll dive into Cash Boost, which people are starting to see the benefit of, which is great. And you can dive into the deeper stuff, which is the JobKeeper payments at the moment, which is really exciting for us. So yeah, the next one will be real estate specific on Thursday. And next week, we want to sort of change the discussion a bit and start talking about some of the other side of the blip. We're going to talk about marketing during these sort of times. We're going to talk about opportunities from a business perspective as well. But of course, if we need to jump on and do another JobKeeper one like Rebecca wants to, we'll do that as well. Thank you, everyone.
Bye, everybody.